Coming up, tech stocks hit, the end of the financial year nears, and what does it mean for your super fund? Next. Hi everyone, welcome to the SBS on the Money podcast for this Friday, the 26th of June 2026. We'll have the latest on the markets in a few moments. It's a day with the Australian share market. Went in and out of positive territory, but managed to end the day higher, up 0.2% before the day, and that's despite a sell-off in global tech stocks as Apple lifted prices for much of its iPad and computer products. It sparked concerns about memory chip demand, compounding AI valuations, which helped to trigger a circuit-breaking trading halt for the second time this week in South Korea. Shares there fell more than 8% at one point. Here, unsurprisingly, tech stocks led the losses, NextDC down 4.5%. The banks were mixed, but the gold miners found some support following recent weakness. It follows a down week for the ASX 200, losing 0.9% over the last 5 trading days. And to walk us through it, I spoke with Tom Wickenden, investment strategist at Betashares. Tom, so it looks like the ASX 200 will finish the week lower. That's as oil, gold and the Australian dollar fell over the past few trading days. What's investor sentiment like at the moment, and what exactly is driving it?
Yeah, look, for the Australian investment, I'd say sentiment is relatively weak. Obviously, there's a lot going on globally. The biggest, macro piece for the past few months now has been the Iran war. It looks like we're getting some form of a resumption there. However, it's still a key risk event. We obviously saw some more action just yesterday with the tanker being hit on the strait. So that is still a risk. But obviously, we've seen oil do a round trip now, lower than it was pre the Iran war. That's weighed on Australian energy stocks. We've also, as you mentioned, seen the gold price back below $4,000 for the first time in a while. So that really big rally at the start of this year come off now. And then, yes, the Australian dollar weakening as well. So, those price factors not great, but I still think the number one factor weighing on sentiment for the Australian investor really is the Australian macro picture. We've had some, flat jobs growth over the past 2 months. We've still got inflation uncomfortably high. We've also got consumer sentiment reads at 50-year lows and an RBA still in play with potentially more rate hikes, which have really weighed on markets year to date. So really the Australian picture isn't too rosy at the moment, and that's probably what's weighing on the Australian investor sentiment the most.
Speaking of the market being weighed down year to date, right? So we've only got 2 more trading days left until the end of the financial year. The ASX 200 is up around about 2.5%. That doesn't include dividends. How should investors feel about this? Because it's not necessarily the best, but at the same time, can you explain what it means for super funds? Because we've heard from the likes of Chant West who say that the median growth fund, for example, is likely to return 9% over the past year.
Yeah, exactly right. So to your point, the Aussie market this year, we're tracking for about 5 to 6% growth over the financial year. So that 2 or 3% figure is the dividend return and about 3% capital growth. Now that is below what investors typically expect on average from the Australian market. If you look at the past 10 financial years, an average of around 9.5% return. So 3 or 4% lower than that mark. It's actually the third worst financial year over the past decade. The other 2 years were 2022 and 2020. So 2 pretty big negative years there because of interest rates and the COVID shock. Ultimately, it doesn't affect well-diversified portfolios too much. And this is to your point with the super statistic there. Most Aussies should have a globally diversified portfolio. There should be a good weighting towards the US market, to global ex-US, to emerging markets. And those markets have done really well this year. Obviously, the AI trade over the past year has been very profitable. And so Australian investors in a well-diversified portfolio, yes, have had more disappointing results from their headline Australian index, but have performed well because of their international exposures and emerging market exposures in particular. So all in all, well-diversified investors, still a pretty good year, with albeit the Aussie market a bit flat.
Are we seeing more investors move away from investing in the Australian share market, perhaps, and looking offshore, for example, going into the US? Can you explain how those overseas markets have performed over the past 12 months? Because we've also got Q2 earnings season in the US a few weeks away, and we're seeing small caps outperform technology more recently.
Yeah, so as I mentioned, the overseas markets have done really well and have outperformed Aussie markets for a number of years now. And it's really an earnings-driven story. For the past 2 or 3 years, we've seen really strong earnings growth in the US markets, in downstream markets from the AI trade, like some of these markets with high number of chip manufacturers in emerging markets like the Korean market and Japanese market. And that's really buoyed returns. If we compare to Australia, we've actually got our earnings in the Australian market still down compared to 2022. This year will be a positive year for earnings growth in Australia, but off a low base. That really tells you the story because those earnings feed into the return. So, yeah, look, we are seeing investors making sure they stay appropriately exposed to international markets, particularly within the US. Although, with the volatility going on in global markets, with the sell-off from some of those large cap technology names, particularly over the past month, sentiment sways around, we are seeing some people, taking some profits from positions and allocating them elsewhere. I think that's really important in these markets, in particular, and that talks very directly to your technology versus small cap, or the big side of town versus the small side of town comment. We're seeing, performance broaden beyond the big cap companies, which are probably seeing some profit taking as investors get a little wary about strong returns over the past 2 or 3 years.
And in wrapping up, what are you telling your clients right now? Where do you see the opportunities for investors?
Yeah, and really it comes across for a lot of what we talked about today, just that diversification piece, both in the Australian market and in international markets. Although the headline ASX 200 figure is only tracking to be about 5 or 6% over the financial year, if we look at certain exposures that are available to investors, such as targeting companies in the Australian market with higher earnings growth, like a quality exposure, or with some higher exposure to materials companies, like traditional value exposures, those have performed really well over the past financial year. So being a bit more selective within the Australian market is really key. And then also globally, a lot of positions have done very well over recent years. We've got a very high weight of US large caps in, let's say, the MSCI World Index, for instance. So investors are just looking to make sure they remain diversified at a regional level, a sector level, and also a thematic level. Not being too tied to one trade is pretty prudent, particularly in this stage of the market cycle.
That's Tom Wickenden there from Betashares, and he wraps up the podcast for this Friday and for this week. Give it a like, a review, and subscribe if you enjoy it. And don't forget, you can watch On the Money during the 6:30 weekday edition of SBS World News on SBS. The podcast returns on Monday. It will drop after the market close. I'll catch you then. This SBS On the Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.